Good afternoon, everybody. I'm Patrick Hill. I'm with FosterThomas. I'm the president here at FosterThomas. A little bit of background on myself. I specialize in human resource compliance as well as benefits advisory services. So my background, I've been the president of FosterThomas, and I've been with FosterThomas for probably 23 years or so. Prior to that, I was the vice president of a consulting firm, a government contractor. We took from 300 employees to 1,200 employees. So my background started off in human resources, and now it's evolved into benefits advisory and HR compliance. Quick overview of who FosterThomas is. So we are a professional consulting firm. We were incorporated in 1993, so next year we'll celebrate 30 years in business. We have about 150 employees. Our focus is around the DC metropolitan area, but we do have operations in 32 different states across the country. Again, we specialize in the government contracting arena. We do service all industries. However, our specialty is within the government contracting arena. We have three main operating systems within FosterThomas. We do HR consulting, benefit advisory, and systems implementation. On the HR consulting side, we focus on compliance, just helping everyone from small to large companies with their HR compliance, everything from developing policies to conducting compliance audits. We deal a lot with employee relations issues. We actually outsource HR departments. We write affirmative action plans. We do employee and management training. On the benefits advisory side of the house, we focus on health and welfare. So we can help advise and broker benefits for companies with the medical, dental, life, disability, and all the voluntary plans that are out there. And then finally, we do systems implementation. We are an ADP Alliance partner, and we help companies with their implementations, usually larger firms implementing their systems, their human capital management systems. On the benefits side, we also help companies set up and implement their benefits portal, and just trying to streamline and optimize all of their online enrollments and day-to-day operations. So today, what we're going to be talking about, basically, there's three main areas I'll be covering today. And when we work with government contractors, there's a lot of issues that come up on a day-to-day basis, but these are the three main areas that we have seen consistently over the years that companies have needed assistance with, and just had some challenges with, and just should be doing as a part of their due diligence to make sure that they are that they're following the guidelines that are governing their business. The first one is the affirmative action plan requirements. I'll go through that. We'll talk about the written affirmative action plan, as well as your EEO-1 and your Veterans 2414 reporting. The second component we'll go into is you'll talk about the HR trainings for government contractors, what government contractors should be doing on an annual basis. It's going to focus on business conduct and ethics, drug-free workplace, as well as harassment and discrimination. And then the third element we'll go into is the service contract administration, specifically focusing on wage determination, health and welfare allowances, vacation, and then the vacation and holiday pay. I think I have about a half an hour to present here, and then afterwards we're going to open it up for questions as we go through. So I'll just go through the presentation, and at the end, if you could just please just save your questions to the end, I'll answer any questions that you guys may have. If I can't get the answer off the top of my head, I will follow up and find the answer out and get it back to you. Okay, so the affirmative action plan, first section that we're talking about. The affirmative action plan, basically, it's governed by the Department of Labor, and it's the OFCCP, the Office of Federal Contract Compliance Programs, that govern this. And basically, what we're talking about is all government contractors, well, I'll get into the specs of it, but government contractors are required to provide equal employment opportunities and support the advancement of employees regardless of their gender, race, disability, or veteran status. Basically, there's three executive orders and acts that govern under the OFCCP, and it's Executive Order 11246, and that focuses on protecting discrimination in employment and hiring for minorities and females. And then you have the Rehabilitation Act of 1973, which focuses on protecting people with disabilities. And the Vietnam Era's Veterans Readjustment Act, as amended through today, focus on protecting veterans. So those are the three areas that it focuses on. But the main focus is not just saying that you have to protect against discrimination in the hiring and employment, but they want government contractors to also take affirmative action, take affirmative efforts in including these individuals and protecting them. And the three main areas that they're trying to have accountability on, and that government contractors are required to comply with. One is a written affirmative action plan. Two is the EEO-1 report filing, and three is the Veterans 2414 report filing. These all must be conducted on an annual basis. So under the written affirmative action plan, basically what we're focusing on here is if you are a federal contractor or a subcontractor providing services to the federal government, and you have 50 employees or more and at least one contract with $50,000, that's the threshold. It's 50-50. 50 employees and $50,000 in contract. You must maintain a written affirmative action plan. And there's a lot of times companies will just cross that threshold, and how long do I have to get the plan up and running? It's within 120 days after meeting the 50 and 50 threshold. And basically what the affirmative action plan requirements are is it's a report that you have to write on an annual basis. And it just describes your policies and practices around harassment, discrimination, and affirmative action. So there's a narrative dialogue that goes through what your policies and practices are around this in terms of hiring, employment, and promotions, and all those different areas. So you have to designate that and define what your policies and practices are. And then there is an analysis that you have to complete. There's a workforce analysis and availability analysis. So under the workforce analysis, you have to take all your jobs and put them in specific job groups, categorizing them in specific job groups. And then within those specific job groups, you have to categorize them additionally into the females and the minorities. So they have you breaking out and segmenting all of your data and your demographics. You take that data and then you have to do a statistical analysis, which is comparing your data with the external census data. A lot of times they compare it to the unemployment data that's out there. And then what you're doing is you're comparing and seeing if you're underrepresented in other areas. Do I have any females that are underrepresented maybe in executive classes? Do I have minorities that are underrepresented in professional classes? So you have to really analyze your data, put your job groups together, and see if you're underrepresented in any other areas. If you are underrepresented, then you have to establish goals to try and improve that. These aren't quotas by any stretch of the imagination. They're not looking and telling you, here's who you have to hire. What they want you to do is just basically define what your practices are, do a workforce analysis, compare it to the external data that's out there, and then there's just statistical analysis that is computed. And if you're underrepresented, then you need to basically put some affirmative action efforts in there, whether it's job outreach programs or just including different people in the recruitment and hiring process, making sure that you're looking at different females and minorities when you are having promotions in those different areas. So that's pretty much what the affirmative action plan requires. A new thing that's recently coming out right now is in the past, companies just had to have a written plan. And basically, when you sign a contract with the government, there's a bunch of reps and certs in the back of it. And one of them is saying that I'm going to comply with Executive Order 11246. I'm going to comply with the Rehabilitation Act of 1973. I'm going to comply with the Vietnam Veterans Readjustment Act of 1974. So you're checking off that you're complying by all these things, but what you really have to do is you have to have a written affirmative action plan on an annual basis. Before, you just had to have a written plan, and then if you got audited, you had to basically show the plan and make sure that everything is up to snuff. Now what they're doing, and this is new this year, contractors must certify that they have developed and maintained an affirmative action plan. The OFCCP has set up a contractor portal, and all government contractors that have to have this requirement must go on the contractor portal and certify that they have a plan that's up and running. So right here is a link to the portal, and there's also a link that has FAQs on how to navigate and what you have to do. You're actually not filing your affirmative action plan online, but you're certifying that you have one in place. Here's what the date is, and they ask you a bunch of different questions around your plan, just to certify that you have it. So that's something new that came out this year. And I think it's going to be a part of the OFCCP's efforts to make sure that organizations are complying. A lot of times it can trigger audits in different areas, but it's nothing crazy or out of the ordinary. You're supposed to have these policies and the plans in place. So now they're just making sure that you certify to do so.
Hey, Patrick, if you're ever audited, how long do you have to generate an affirmative action plan?
Yeah, it's 30 days is usually what happens. So if you get a letter from the Department of Labor, they're going to tell you you have 30 days to provide us with your affirmative action plan. At FosterThomas, we help companies obviously write affirmative action plans. We get business two ways. One, people are proactive. They want to make sure they have it done on an annual basis. Or two, we get it where they say, uh-oh, I got the letter. Can you help me out? But it's different though, because you know, you can go back and take a snapshot and analyze your workforce going back if you have all the data, but you also have to be doing things on an ongoing basis, and it's important. And some of this data, if you're not doing an ongoing basis, is challenging to get if you're not doing it. Specifically, on an ongoing basis, you have to track your applicants and your employees' demographics. So not just the people who you're hiring, but who you have interviewed. So a lot of times, if companies aren't doing this on an ongoing basis, it's difficult to get that data on an ongoing basis. So you have to file your written affirmative action plan, write it, file it, but then on an ongoing basis, you have to track your applicants and your hires. You have to track your promotions and your transfers, your terminations, and then just different compensation things. And again, they're tracking it. You're tracking it by demographics, minorities, females, and then in the job group categories. The other two components that you have to comply with are on an annual basis, you have to file your EEO-1 report and your Veterans 4212 report. And basically, so if you, again, under the EEO-1 report, it's 50 and 50. If you have 50 employees or more and $50,000 in contracts, you must file an EEO-1 report. And what this is, this basically grabs all your data and it gets, again, it gets the demographics of your employees based on minority status and based on females and then based on job groups. And you have to basically file this data on an annual basis. This is not just certifying that we have a report that's going on, but there is an EEO-1 report and it's formatted specifically to make sure that you have all these characteristics on there that you must file on an annual basis. Below is the link and where you need to file it. So this is done annually by March 31st. They've been extending it recently because of COVID and different aspects of it. So this year they extended it to May 31st. However, for people who have not filed by May 31st, non-filers, they should be getting a notice that, hey, you haven't filed and you have until June 20th to file it. So if you haven't gotten it out there, time's running by. It's June 15th right now. So you have 5 days to get this file for your EEO-1 report. And this is important. This does become a part of your, if you get audited, they want to see your affirmative action plan, but they also want to see that you filed your EEO-1 report as well as your Veterans 4212 report. On the Veterans 4212 report, that's due by September 30th. And anybody who has a contract or subcontract with the federal government, if it has $150,000 threshold, which is very low, you have to file this report. So the Veterans 4212 reports, it's a little bit more streamlined, but that's done annually every year by September 30th. And this is the link where you can get it to file.
That used to be called Vets 100s, right?
Yeah, they changed that a couple of years ago. Correct. So on the audits, again, when you sign off on a contract, all the reps and certs at the end, you're signing off that we're going to comply with all these different requirements. But the OFCCP, Division of the Department of Labor, Office of Federal Contract Compliance Program, they govern this area and they do audits. So the affirmative action plans are one area that I've seen where it is unsolicited audits. A lot of times companies get audited or they have different areas where the Department of Labor gets involved, and it's usually reactionary. Somebody files a complaint or something happens. In terms of affirmative action plans, these are random audits and they come out a lot. And we've had a lot of companies that have been triggered for audits, both small and large size companies. So it varies, but they are they are triggered by the Department of Labor, and I don't know the rhyme or reason why they're picking the different companies, but it happens a lot, and it's nothing that requires it, where they're saying you did something wrong, but hey, it's a part of our process, and we're doing an audit, and you get the letter and you have to do it. The penalties that are involved, suspension of current contracts. You could have loss of future contracts, financial penalties and fines, restitution to employees, and then obviously debarment. They're looking for a good faith effort, though. Really, as long as you have a good faith effort and you're trying to do things, they'll work with you. We've been involved in a number of different audits for different organizations, but so long as you're filing your reports, and if you haven't filed your reports, you're doing your due diligence into making sure you get it up, you should be okay. I have seen areas where some people were underrepresented, in terms of promotions, in terms of salary levels, and they have had to go back and make some restitution to employees in terms of salaries. I have seen some people get in trouble where their contract has been suspended, but basically, again, it wasn't a good faith effort. They really didn't respond and try and work with the Department of Labor and OFCCP. But the best practice is to be proactive, certify that you have your affirmative action plan updated on an annual basis, file your EO1 reports, and file your vets 421 report. Just make sure that you have that on an annual basis. That is it for the affirmative action requirements. The next aspect is government contractor trainings. And this is an area, again, that we see that organizations are requiring on an annual basis as part of their due diligence to make sure that they're following their guidelines and their requirements. In terms of government contractor trainings, what we're talking about, the three that we recommend that organizations do on an annual basis is the business conduct and ethics, drug-free workplace, and then the anti-harassment and discrimination, which is focusing on diversity, equity, and inclusion. Business conduct and ethics is probably one of the most important ones because it's required by the FAR, the Federal Acquisition Regulations. FAR 3.10, that deals with procurement integrity. 52-203-13, that talks about ethical conduct. And then 52-203-14, that deals with reporting of violations. So those are the three different requirements, the FAR requirements that are requiring you to have a business code of conduct. What they're looking at, really, time charging is the biggest thing. When you're dealing with the federal government, you're recording and charging your time. That is the biggest emphasis. It does also get into business acquisition when you're talking about how we're acquiring business in terms of, in terms of bidding out contracts and working against competitors and rates and different things like that, making sure that you have, they make sure that you have procurement integrity when you're doing your business acquisition. Gets into gratuities and kickbacks and conflicts of interest. So these are the main focuses when they're talking about ethical problem areas and your business code of conduct. Again, where this comes into play, it's anybody that it has a contract with the federal government that's greater than $5 million. Once that triggers, again, within 120 days, you must have a formal business code of conduct and ethics guidelines. You must institute and maintain internal controls. And part of the internal controls they're talking about is obviously to have, to have proper policies, to have proper reporting procedures in place, to do audits, timesheet audits. They want to see that there's timesheet audits, to have a hotline that's there where people can raise complaints and report suspected violations. These are the things that they want you to have as a part of your business code of conduct programs. And then, you really just need to represent an ongoing effort to promote compliance and ensure employees understand the code. And that's why you should be doing annual training. It's important to reinforce it. Again, I have seen companies that have been in trouble. A lot of times it has to do with timekeeping requirements. And then all of a sudden they get audited and they come through and they go through a whole report. And it's like, well, do you have a code of conduct? Have you done any timesheet audits? Do you have avenues for reporting? These are the things that companies need to have. Have you reinforced it with your employees? It goes a long way if you ever have a violation or a suspected violation against you, to make sure that you have this in place. So this is something that companies, again, should be doing on an annual basis. The Drug-Free Workplace Act is another one that companies should be working with, and it has a requirement to work with on an annual basis. Part of the Drug-Free Workplace Act of 1988 states that contractors with contracts over $100,000 must comply with the Drug-Free Workplace Act. And again, you have to establish and have a drug-free awareness program in place. This isn't specifically a drug testing program in place, although a lot of government contractors have to have a drug testing program and it becomes a part of their drug-free workplace. However, this is specifically Drug-Free Workplace Act. Inform employees on the dangers of drug abuse. Let them know what the company's drug-free workplace policy is, the penalties for violations within the workplace, and the availability of any drug counseling that's available to them, and rehabilitation and employee assistance program. It's a proactive program just to make sure that drugs do not enter the workplace, and if they do, that it's dealt with promptly and effectively, and that employees have avenues to seek assistance. And again, annual program where you need to do it. Training is the best method to do so. A lot of times companies will just put out materials and reestablish their policies, but training and having them sign off on acknowledgments of training is the most effective way to establish and continue your drug-free awareness program, which is required on an annual basis.
Hey, Patrick, I know with the pot cards coming out and DC legalizing it and a number of different states doing that, has there been a lot more questions on the drug-free workplace, especially with the drug or the medical marijuana cards rolling out more?
It comes up, it does come up. However, the federal government has a stance on it, and it's zero tolerance for the most part. I mean, if there's medical necessities, that's a different component, but for the most part, I mean, even though it is legal in a number of different states, that doesn't mean that it's legal federally, and it doesn't mean that it's legal in the workplace in the different areas. So it is important right now to reemphasize what the policies are to make sure. And it does come up a lot of times because people think, hey, I'm doing it recreationally or I'm doing it medically, but it's legal. Well, it's, it could still be a violation of company policy, and on a federal basis, it is. So again, the Drug-Free Workplace Acts require each employee directly involved in the work of a contract also to notify. So if there's a criminal conviction, they have to notify within 5 days, and then notify the federal agency by the contractor of a conviction within 10 days. So it's not just to keep it out of the workplace and to give them avenues to get support, but there also is the requirement that if anybody has a conviction, you have to notify the workplace, and then you also notify the federal agency. So again, this is the Drug-Free Workplace of 1988 that all government contractors have to comply with. Non-compliance, once again, gets into suspension of contracts, loss of future contract opportunities, financial penalties and fines, and debarment. Again, they're looking for a good faith effort within this to make sure you have the proper policies and that you're reinforcing them. The final element on training is harassment and discrimination, anti-harassment and discrimination. And again, it all revolves around diversity, equity, and inclusion. And the absence of diversity, equity, and inclusion, it's not just from a legal perspective, but it's good business practice. And in the absence of diversity, equity, and inclusion, it could damage an organization's reputation. It can undermine the trust and respect. This is an area that has been expanding immensely over the last 5 years or so, maybe 8 to 5 years, where there's a lot more protected classes that are out there. Each state is opening up a little bit different. So there's the federal guidelines and there's the state guidelines that you have to go through. So it's important that you're protecting everybody and you're not discriminating against anybody based on a number of different protected categories that are out there. This is also an area that we see where companies are exposed to damaging liabilities. You read about it in the newspapers all the time, and the fines and the different things that the employers are subjected to from harassment discrimination standpoint. So there's a lot on the line in terms of financial aspects, but also it's just non-productive. We've dealt with FosterThomas. We do investigations and help organizations out when complaints come through. And it's the most non-productive thing an organization has to go through. It really is. It affects people personally. It affects them professionally. It affects morale. Sometimes companies are pitted against each other and everything. So the main thing is you just want to make sure that it stays out of the workplace. And if it does enter the workplace, that it's dealt with in a prompt and effective fashion. Communication and practices is the key. You have to be ahead of this and just make sure that you're embracing diversity, equity, and inclusion, and you have strategies in place to do so, not just policies, but different practices behind it. You obviously have to have a firm anti-harassment, non-discrimination policy. You have to have a complaint procedure, multiple avenues for people to complain. When things are brought to your attention, that you have prompt and thorough investigations, and that you take corrective action where necessary. Also have to have a non-retaliation policy. And then, you need to make sure that you're communicating this to your employees and your managers on what their rights are and what their responsibilities are. And then as a company, you want to protect yourself and document this. And again, training is the best way to do so, and having it documented. Harassment, discrimination, when it comes into the workplace, there's one thing that employer has, it's the only thing that the employers have really to protect themselves, and it's called affirmative defense. So if you have a complaint against you as an organization, you're technically not innocent until proven guilty. You have to defend yourself and show that, number one, you exercise reasonable care to prevent and promptly correct for harassing and discriminatory behavior. And again, it all comes from your policies and your practices and your training. What reasonable care do we take? What actions do we take? Making sure that's in place. And then the other element is that the employee unreasonably failed to take advantage of any preventive or corrective opportunities provided to them by the employer to otherwise advise harm. A lot of complaints come through, and the first thing the company says is, I did not know about this. Our managers did not know about this. And all of a sudden someone files a complaint with the Department of Labor. But as you can start going through and peeling back the layers of the onion, hey, you were trained on what your rights are and what the avenues are to raise a complaint, and you didn't speak to your supervisor, you didn't contact the hotline, you didn't do different things. So these are just part of the affirmative defense that companies should have in place, but it's equally important to communicate it to your employees and just make sure that they're aware of their rights and what their responsibilities are. Before I get into the Service Contract Act, again, just the three areas that are important on an annual basis that you need to be reassuring with is Business Code of Conduct, Anti-Harassment and Discrimination training, and then the drug-free workplace. Should be done on an annual basis. All right, the last element we have, I think I have about 5 or 10 minutes left, so I think we're doing well on time, but is the Service Contract Act. And the Service Contract Act, we have some employers are deep into it, and they have a lot of Service Contract Act employees. Other organizations are new to it, and they'll have smaller contracts and new contracts that come up, and they try and navigate. How can I navigate in here? And there's some differences. It's very different than just having a professional services contract. But the main areas that I want to cover today are the wage determinations, the fringe rates and bona fide fringe benefits, the vacation pay, and the holiday pay. And these are the 4 areas of main compliance, and a lot of areas from an HR perspective that organizations are having difficulty navigating, because it's just a little different than treating normal employees or non-Service Contract Act employees. But the Service Contract Act, basically, the main thing it does is it talks about the payment of wages. So paying the minimum in accordance with the applicable wage determination. So there is a website that you can go to find out what the wage determinations are. But basically, under Executive Order 140246, it's new, January 30th of this year, they raised the minimum wage. So each state has their own minimum wage, as you know. However, under the Service Contract Act, their minimum wage now is $15 per hour. That's the minimum. However, for each job categories that are under a Service Contract Act, or also the Davis-Bacon Act, you have to abide by the wage determination. So they'll set a minimum wage for what the specific position would be. It's not going to be less than 15, but it could be higher too. Different positions have different wage determinations. So you need to look up what the wage determination is and make sure that you're paying it at a minimum. It's similar to the Fair Labor Standards Act, where it identifies what the minimum wage is. And under the Fair Labor Standards Act, where you have non-exempt employees that are entitled to overtime, similar, Service Contract Act is the same way. However, they're not just saying, here's the minimum you need to pay them. They're saying, here's the minimum you need to pay them, or here's what the wage determination is for each position. So if you get a Service Contract Act, you have to look at what the position is, go to the wage determination schedule and say, here's the minimum that we're going to pay them. You can pay them more, but you have to make sure that you pay them at least the minimum for each different wage determination for every position under a Service Contract Act. So when you get into the fringe benefit rates, this is a different area. So you have the wage determination will identify what the base wage rate should be for the specific position. But then they also have a fringe rate. And you have to make sure that you're paying the minimum in accordance with the applicable wage determination. The wage determination will say what the fringe rate is going to be. Current fringe rate right now is $4.60 per hour. So what that means is you need to provide, in addition to the base wage, you need to provide a health and welfare allowance, is what they call it. You need to provide a health and welfare allowance of $4.60 per hour, or whatever the wage determination states. It could be different for different areas and different positions, but you need to put that per hour. It's important that you separate this from their base wages, and you can't just lump it together and say, here's what the wage determination says the base wage is. I'm just going to add the $4.60 per hour and just pay it to them. That's incorrect. You have to break it out and record this information separately. And then you have two ways that you can provide this to the employees. You could pay it out in cash in lieu of benefits, or you can apply it to a bona fide fringe benefit. So ultimately, this was set up to pay for the fringe rates, to pay for health and welfare allowance, to pay for their benefits. And a lot of times companies, you can use it so long as it meets the criteria of a bona fide fringe benefit on the IRS and ERISA guidelines, which technically, it's medical, dental, life, disability insurance, retirement plans, FSA contributions, those types of things. That's what it's intended to be used for. What a lot of companies will do is they'll pay out that, they'll give them their base rate, then they'll give them the allowance to use for their benefits. And then if they don't use it on the benefits, they can pay for it. They can give it cash in lieu of benefits. You don't have to do it that way. You can give cash in lieu of benefits, but you can spend all of this health and welfare allowance on benefits. So what some companies will do is, even if it's not voluntary, some companies will say, look, we're going to use this for benefits, and it's for benefits related only. If you enroll in the medical plan or the dental plan or the disability plan, it'll be used to pay for that. However, if you don't use it, we're going to take the remaining amount and put it in a retirement plan for you. So it's automatically being used for benefits. So some companies will do that. Other companies say, no, we're going to give them the option. They can use it to pay for their benefits, or we can pay it out in cash. If you pay it out in cash, again, must be paid on the regularly paid date included. You must separate it from the base rates of pay, and it can't be credited towards your wage requirements. It has to be separate from the wage determination, back and forth. So that's kind of important, and where it comes up, and a lot of companies don't record properly, or they're not allocating it properly. And the other thing is, you treat these people differently than you would your other employees who are non-Service Contract Act employees. For example, if I have a medical plan where I'm enrolling my participants, and the company pays 80% for the employee-only coverage, and the individual employee-only coverage is, let's say, it's $600 a month, and that's what the employer has to pay. That's what the employee has to pay. Under the Service Contract Act, the $4.60 is part of the employer's contribution. So the employee pays 100% of the benefits normally. You can do it differently, but for the most part, you're looking at that $4.60 as an employer contribution as well. And you usually make the employees pay 100% of what the total benefits are. So it gets kind of challenging with navigating that, but we do help companies out and what their best way is to try and approach it and to navigate how we're going to pay them back.
The only thing I'll add on to that is, as soon as you do cash in lieu, it increases your FICA and FUTA taxes and additional taxes you pay on the wages to employees. So that's why a lot of employers love to focus it mainly to benefits, because it lowers gross income, lowers the additional taxes they have to pay on income.
Yeah, it's a good point. 7.65% is what you're looking at. If you have a small contract and a couple employees or 30 employees or something, it's not dramatic. If you have a large contract, that adds up. And then also when you're trying to bid for it and be competitive, those rates do factor in. So that's a good point, Mike. The second element that I just want to get into is the vacation and sick pay for the Service Contract Act. So vacation pay is different as well. Basically, what you do is there's a wage determination that's going to tell them how much vacation pay they get, and it's different. So what happens is it's not accrued. Under the Service Contract Act, it's credited and vested in a lump sum after 1 year of employment. So the employee, generally it works where you get 2 weeks after 1 year, and then 3 weeks after 5 years. But the wage determination will state specifically how much vacation you need to provide your employees with. It's different than accruing on a pay period basis. Basically, what you do is they get it in a lump sum. So you don't necessarily have to provide it to them in the first year, but at the end of year one, they get it in a lump sum. And then it's theirs. It's fully vested. If they terminate, they take it with them. And they have it. So vacation's a little bit different. And one thing is where I say it's usually not done in the first year. Companies can do it. You don't have to provide it, but some companies it can give them vacation. But your only requirement is to give them a lump sum after year one. If you give them something in beforehand, that's fine, but that's on the company. At the end of the anniversary, you still have to provide them with that lump sum of vacation. The other thing that's important is the tracking and honoring of prior service with predecessor or successor contractors. A lot of times there's badge changes that go along, and some people work for one organization one year, and then all of a sudden somebody else wins the contract and they go to another one. They're protected in this area. So if you're on the same contract and you're working with a predecessor or successor, your seniority on that contract will count. So a lot of times when you go through and then you do it, hey, I've been working on this contract for 3 years. I'm due for more than just 2 weeks of benefit. And I don't have to wait a year. You have to honor the prior service. So that's important to know. And the other thing is it's prorated for part-time employees. Again, what they do is they look at the previous year's hours and then they prorate it. So if let's say I worked 50% of the time, and then after my first year, I was due technically for 2 weeks. If I was a full-time employee, just prorated, I'd be due for 1 week. So that's important to know. And it's very different than other vacation policies. And then the last element that I want to address today was the holiday pay under the Service Contract Act. And again, the applicable wage determination will state how many holidays. There's 10 holidays, and here's the holidays that you need to provide. So it's important that you do follow the wage determination. It's not the standard corporate policies, holiday policies, because some corporations have different holiday policies than what the Service Contract Act will state. But it will be stated on the wage determination. You must abide by that, and then employees are entitled to holiday pay if they work. They're scheduled to work in the work week. So like sometimes people will be on a leave without pay status, but the Service Contract Act states that employees are entitled if they work within that work week, or if they're in a compensatable status, if they're on vacation or something. So long as they're in a compensatable status, they're entitled for that. Part-time employees receive prorated amount based on the hours worked in the preceding week. So they look at it, all right, how many hours did you work the week before? If you're scheduled to work that following week, and you'll get a prorated amount. Again, employees are not entitled to holiday pay if it's not in the wage determination. Like sometimes the government has a proclamation where they state a specific date. It has to be specifically named in the wage determination. For example, Juneteenth is coming up, and last October they put it in the Service Contract Act. So all Service Contract Act employees are going to have Juneteenth off, where previously it wasn't specifically in the wage determinations. It's a federal holiday. Government contractors generally don't have to abide by that. A lot of them are, but they don't specifically have to abide by that. However, if you have a Service Contract Act employee, you need to. So that's the Service Contract Act. And that wraps it up for today. You know, again, I just try to highlight some of the different areas where we find our clients challenging. Affirmative action plans, government contractor trainings, and the Service Contract Act were three that I want to talk about today. We still have a little bit of time. I think I said 12:47 right now, so we're on schedule, and I can open it up to questions if anybody has any questions.
Yeah.
Yes, Karen.
Yeah. Okay, so I have a couple of questions. So one, I have to say, you know, I've heard a lot of these, but that is the best I've ever heard these different things explained. So I'm just really impressed by your presentation. I think that was very informative. But are companies able to spend health and welfare benefits for the Service Contract Act employees, even if they do not voluntarily enroll in a qualified plan?
Yeah, it's a good question, definitely. Yeah, so a lot of organizations will do it. So the voluntary plans, you know, are you know, like, let's say I want dental, I don't want dental a lot of times, but yes, so I can enroll them in a life insurance plan, for example, and just take those dollars, even if they don't voluntarily sign up for it. I can enroll them in a life insurance plan. Like I stated before, and Mike stated before, some companies want to spend all that money on benefits to avoid some of the FICA expenses that an organization could incur. And what they'll do is they'll say, look, you pick all the benefits that you want voluntarily. If you spend the money, it's spent. If you don't spend the money, we're going to put it into a retirement plan. So a lot of times what organizations will do is they'll set up a 401k plan or a 403b plan. They'll set that up, and then they'll just say, all right, here's the money. If you spend it on benefits, that's great. Medical, dental, life, disability. If you don't elect those benefits, we're taking that money and we're going to put it in a retirement plan. So yeah, they don't have to necessarily sign up voluntarily. The company can enroll them in plans.
Okay. And then I'm just curious because, again, you see the affirmative action plan, you know, you have to, when you do your reps and certs and SAM, that comes up in terms of, do you have a affirmative action plan or do you not have contracts that require it and so forth? But how are companies getting notified that they now have to go to this portal? Or is it with new awards, or how is that working?
Yeah, it's everybody that has to do it. So they've been notified, you know, and it's a good question.
Okay.
Behind the scenes, from a contractual perspective, I'm not sure, but it is a requirement that's been coming out for a while, where the OFCCP is making a part of it. So I think they amended, I don't know if it's part of Executive Order 11246, but they're stating now, and they're changing the requirement where you just don't have to have a plan, but you have to file and certify that you have a plan. I don't think there was like a formal requirement that was out. I mean, I've seen a lot of stuff out there from the Department of Labor with just different notices coming out. And I've also seen law firms talking about this requirement. I don't know if it's specifically a part of the contract. It probably is in the new contract right now, but if you have a current contract, you're still required to certify. It's a good question. I don't know the specific answer how they've been notified, but I do know that everybody that has a it is effective now where it's coming apart, where you have to certify it now for all government contractors. 50 and 50. 50 if you have 50 employees and $50,000.
Okay. And I have one other question. Like, so what would you say is, what do you see or what do you think is the most common in terms of your experience, what you hear from companies in terms of their biggest areas of exposure, in terms of, you know, not complying with business conduct and ethics practices, and what, you know, and what happens, what the consequences are?
Yeah, from a business conduct and ethics standpoint, the biggest exposure that I've seen is timekeeping. Timekeeping fraud. And the government cracks down on that a lot. I've seen companies get in trouble where, you know, I don't know, they talk about padding your timesheets or something, but a lot of times, you managers will do the work and some of their subordinates don't have all the hours and the work gets done, but I did it all. And I tell my subordinate to put a couple hours on their timesheet and it's not legit. And then all of a sudden an employee gets put in a compromising position and they blow the whistle, or an employee gets terminated and they say, hey, wait a second, you didn't, you actually weren't operating correct behind the scenes. I'm going to the Department of Labor. So timekeeping fraud is the biggest thing that I've seen where the government gets really strict in terms of business conduct and ethics. That's the largest thing that I've seen.
And are there other questions? I guess if you have a question, you can either put in the chat, thanks for your information, Mike, or come on camera and raise your hand, one or the other.
And I just found the answer to that question, Patrick. And that's basically contractors were emailed as of February 1st, 2022, saying when they had to log on and register for the website. And I have until June 30th, 2022 to actually do it.
Okay, great. Thanks, Mike.
Yep.
Good information. Well, thank you, Patrick. I have to say, again, this was like one of the most informative presentations that I've heard on this topic. And I learned a lot, which, in 20 years, after 20 years, I do learn some things, but a lot of times I've heard that, done that, and so forth. So very informative. Thanks very much.
Well, thank you. I was glad and pleased to be a part of this chat today. And if you guys have any other future questions or anything we didn't address today, please feel free to reach out to myself or Mike DeBall. I'm happy to be a part of your chat today. Thanks for including us.
All right. Thank you. And thanks everyone for joining, and hope you have a great day.